a warm welcome to this study circle meeting. Today's topic for this meeting is on case laws, GST case laws. Certain specific case laws will be addressed by the speaker. We have CA Mahadev R with us to take us through this session. I request our Vice Chairman Manjunath Hallu to escort him to the dais and also to greet him with the floral bouquet. A warm welcome to you too, Manjunath. Please take a seat. Before I hand over the desk, I'll introduce the speaker. He is a partner at HNA & Co. LLP, a chartered accountants firm in India. He's been involved in advising different businesses across manufacturing and other service industries, and since in indirect taxes since 2011. He is heading the review and compliance division of the firm in Bangalore. He has co-authored many books, which includes Guide to GST Compliance Review for commercial law publishers, and also some of the books which are published here for the students. He is also an active contributor of research articles to Karnataka State Chartered Accountants Association, Journal, Bangalore ICI Journal, GST Law Times, taxguru.com and so on. He has also given lectures at various places which include CAG's office, ICS study circles, Hiragiri Academy and various commerce colleges and across the country. It's an honor to have you here with us, Mahadev sir. Thank you for being here. Over to you.
Thank you, ma'am, for the introduction. Very honored to have this opportunity to speak to chartered accountants. When I was asking for the number of registrations, he was saying 150. So I was wondering, weekday 150, how it is possible? Then he told me one secret. In this month end, you have to fulfill your CP quota. So I understood that most of the registrations may be for CPRs. Of course, some of them may be for knowledge also. And there can be third category also, which is combination. We want CPA as well as knowledge. So if I ask you whether you come for CPA or knowledge, most of you will say it is combination. So my request is, this session can be very, very boring unless you promise me to interact more. So you have to interact, ask questions, answer questions also, then only this can be interesting. Otherwise, this can be very, very boring session for sure. Because most of you, as the numbers I saw, would have come for only CP. That is also possible. So one more speciality of this session especially is the presence of my senior Vinay. I can easily say that I am here and he is one of the main reason for it. Because when I joined this firm, so I am from HNA & Co. Formerly known as Hiragiri and Associates. Home I am not preaching any ethics, no code. When I joined that firm, at least for 15 days I was thinking how many days I will last here. Because everybody was speaking in English and the language also is they were using all legal language, I was not understanding anything. Then Vinay came. Then he spoke to me in Kannada. Then I understood, okay, there are people in this firm who know Kannada also. So I can survive for another 15-20 days. But he gave me a lot of comfort. So I think my first assignment was with Vinay. And I think we were together for almost 7-8 years. You know? So it was very, very comfortable. So I should thank Vinay also. I thought I should thank you. Thanks. Thank you. It is not case laws. I am going to take some case studies because as it is evening sessions, bit boring. So I don't want to make it more boring by taking more legal aspects of it. So I try to take only simple case studies based on the assumption that, as I requested earlier, you will participate, interact. And I am not expecting you to give correct answers, because if you give correct answers, then I will not have anything much to say. Okay? But I want you to try for sure. Okay? Even if it is wrong, it is absolutely okay. You are not going to have any negative markings also. The first case study is, most of you must be knowing that we have a new concept which is going to be mandatory from April 1st, 2025, which is IST. So what is IST? My first question for the day. What is IST? All of you are chartered accountants, right? Yes. What is IST? Okay. So this is going to be mandatory from April 1st, 2025. So this case study is for our own firm. So HNA. So HNA understands that it needs to obtain IST registration from 1st April 2025, and it has, because there are multiple branches across India. In this regard, there are certain questions for which we need to find answer. Okay? I'll give you the question, answer has to be from your side. Is it mandatory to take IST registration, or can we continue to do cross charges as against IST? So who will start?
It's not mandatory.
Sorry?
It's not mandatory.
It is not mandatory. You want to answer?
I think both of them are two different concepts. ISD is when an external party comes into the picture, then ISD registration will be mandatory. Whereas when you are billing internally, then cross-charge can be done. So both can exist.
Both are different.
And can exist together.
Okay. Is it mandatory?
ISD is mandatory.
IST is mandatory. Okay. Yes. Thank you. Anybody having different view? That it can be, instead of IST, it can be cross charges. Anybody saying that? No? Yes. So till 31st March, we have this option. So we can do cross charge, or we can continue to do IST if you already have a registration. But from April, this is going to be mandatory. This is not a new concept in GST altogether. If some of you have handled service tax, so in service tax also this concept was there. In order to distribute the credits to my own factory, say I have a centralized registration. We had a concept of centralized registration in service tax, and there were multiple registration in central excise. So if I had to distribute the credits from head office to my factories, I had to use this mechanism. And can I distribute credits on capital goods and inputs also in IST, or should it be only input services? Input services. You have anything to say? Next question is, our Bangalore office is considered to be head office, wherein certain expenses are being incurred, which are common for other locations also. But we have Hyderabad location also. Say, for an example, all HR related expenses are being incurred from Hyderabad, which is also common for other registrations. Now the question which is there is, can I take IST registration for Hyderabad as well as Bangalore, or should it be only for Bangalore? Can I have multiple registration as IST at a time? Can I get answer from this question? Yeah.
There is no restriction per se to obtain more than one IST registration. Maybe you may have expenses which are particular to particular agencies, our place now. Maybe you want to use one of those states for that particular region to distribute the credit only with respect to expenses which are common for those particular states.
Okay. So you are saying it can be multiple registration also as GST, right? Yes. So there is no restriction in GST for multiple registration as IST. In our example, it can be for Bangalore as well as it can be for Hyderabad location. I can have a multiple registration. But as far as possible, I should try to avoid, because if I have more registration, more compliance. The next question is, head office supports other locations. Assume there is no revenue from head office. But head office has certain expenses like rentals, it has a security expenses. Now, whether these expenses credits also should be distributed to other locations, or should it be only with Bangalore location? You understood the questions? As she was saying, so there can be two types of expenses. One expense, say I'll take the example of statutory auditor. So statutory auditor is doing the audit for all our locations. So it is very clear case, so I will distribute this credit for statutory auditor invoice to all the locations based on the turnover. Because turnover is the basis based on which I should transfer the credits. Now, the expenses, the example which I have taken is head office expense, rentals, security. Because this head office is working for other locations. Whether these expenses also I should consider for distributing the credits or not? That is the question. Please try. So you can be wrong also, you can be right also, it is absolutely okay. Trying is important.
It has to be cross-charged because the condition is that ISD should not consume any services of the students. Just the mechanism to receive the invoices and distribute the credits. But in this case,
Is it there? Whether the condition is there, but it should not consume?
that it should be just, it's just a distribution mechanism. In this case, right?
It can be consumer also, no? Say I take the example of statutory auditor. So in statutory audit example, so Bangalore is a consumer also. What was your answer, sir? You said so. It can be or it should be. It should be distributed to other locations. If you see what the definition of section 20 covers is, any expenses which are incurred for or on behalf of other location, it says. But in case of expenses like this, rentals, security, it is very difficult to substantiate that it is for other locations. Now there has to be a head office. Now these expenses are incurred for the existence of head office. It is not only for the other branches. So therefore, I think somebody said cross-charge can be the mechanism. Who said that? Somebody said cross-charge should be done. So cross-charge may be the right approach in this, because if we get into too much nitty-gritties, it can be very, very complicated. As it is, we are struggling so much in GST compliance, right? It is not at all easy. And with the introduction of IMS, once they make it mandatory, it is going to be even more tougher for all of us, consultants as well as clients.
Sir, how about statutory audit fee? Because the premises at which we are dealing rentals and security, I can understand. What happens in the case of a statutory audit? Because that is not pertaining to head office alone.
It has to be distributed.
It has to be distributed.
It has to be distributed. See, the concept of ISD is you have to identify the common expenses wherein the services are consumed from multiple locations. If it is multiple location, you have to distribute, or sometimes it is also possible. Say you have a machine in your Chennai factory. So for that machine installation, you got some invoice which is addressed to your head office. So in this case, entire credit should go to Chennai. You cannot distribute this common to your Bangalore office, Hyderabad office or Chennai office. Wherever it is specific, it should go to that specific location. Wherever it is common, say it is common to all the location, we should consider all the turnover. If it is specific to say 2 or 3 branches, it should go to only those 2 or 3 branches. This is how this credit distribution has to be done. Yes.
Just wanted to ask, we had this judgment on the issue and said that head office is a distinct entity, and because of such status, the head office is required to is providing services and they will have to fill the other branches also.
They may have to bill, because again it depends whether you really want to do, because we have the Rule 28 benefit also, no?
Correct, but in case of say healthcare and all, where this particular benefit is
Not possible, yes. There has a cross charge may be there, yes.
So for arriving at the valuation, would they would it be required mandatorily to account these particular expenses under the head office itself, and rather than bringing it into ISD umbrella?
See, wherever it is clearly common, best example which we have taken is statutory auditor bill. So it is very clear, the auditor is doing the audit for all the location. Whereas the head office rental, it is not easy to say that this building is used for other locations also. It's more or less clear. So this is an immobile property, it is used for the operations of the head office. So in those cases, that this is the expense for head office, therefore I will not distribute, but rather than that I will consider it for costing my cross charges. Any doubts till now, whatever we have discussed? Yes. You have to be a bit louder. You'll get mic. Good to see some familiar faces. Get some confidence. Yes, sir.
In case you telling that we have to do cross charge, then that will defeat the purpose of ISD, because whatever is specific to certain branch, they are going to invoice it to certain branch, the supplier. Otherwise, that itself the charge will become wrong by supplier if they are going to head office.
That is what we discussed. No? You may have joined late, I am not sure. Were you there from the beginning?
Yeah.
Okay. So what we concluded is common expenses, you should distribute the credits. I took only specific service example, two examples which I took is the rentals of head office, security of head office. So because these two cases you are incurring for that head office. He is not the common security guard for all your branches. He is the security for your head office in Bangalore.
Now, in case you said something is supplied to Chennai but billed to head office, then you have to distribute to.
Correct.
So that supplier itself is wrong that he is billing to head office, and because that has to bill to Chennai.
Yes, see, order could have been done from head office, or there can be multiple reasons for which invoice is done to head office. Say you wish to communicate to the vendor that it has to be billed to Chennai address. Because you have an admin team from head office, so they have said that you have to provide this service for this machinery in Chennai. He has just given you an invoice addressing to head office. So that could be the case. The next question is, there are certain expenses on which GST has to be paid under reverse charge. Whether this reverse charge expenses also should be considered for distribution of credits. Should we? Yes? Yes. No. But if you see the present definition as it is, which is valid as on today, it doesn't cover reverse charge expenses. So the amendment was made in last budget, 2024-25 budget. They made an amendment to this IST definition wherein they included even reverse charge expenses for the purpose of distribution of credits. Again, there was some lacuna which has been addressed in this budget. Budget 2025 also there was a small change which they made to definition of IST and section 20. Section 20 basically talks about how you should do the distribution of credits in case of IST. So the change is they had not covered the liability under interstate supply. Say you are doing this import of services, or you have interstate supplies from one state to another state, you have received some expenses on which you have to pay GST and reverse charge. So those were not covered in this definition. So that has been corrected in the recent definition. So that is the one change which has happened in this budget. The next question is, now if I have this RCM liability, how will I pay this? How will I distribute this credit? Because this invoice will be addressed to my regular registration, or it may be without any registration number also. Assume it is an input of service. You are downloading some software from US. So invoice will just say ABC Limited so many dollars. Now how will you tackle this for ISD compliance? Can anybody try?
They will have to make the payment to regular GST. From there, they have to raise the invoice from their distribution.
Okay. What sir is saying is they have to pay under regular registration, and then what is that second step, sir?
Raise invoice on the ISD.
Raise invoice on the IST. So in our example, from head office to IST, we will raise the invoice with IST number. Any other answers, alternative answers to address this? If you're not interacting, looks like the session will get over in 1 hour. Okay. So, sir is correct. There is no option to pay any tax under IST registration. So we have to pay tax under our regular registration. Then there has to be a invoicing from our regular registration to IST registration number. So from IST, again this credit will get distributed to all the users. Next question. Should we distribute even ineligible credits? Yes? The next question is, what would be Rule 37 impact? What is Rule 37? Any idea? 180 days. Who said that? Who said? Yeah. Okay, you don't have to answer. I know you know the answer. Yes, sir. What does it say?
You don't pay a supplier within 180 days. You have to reverse the credit what you have taken.
Okay. Who has to pay this?
The recipient.
The recipient. What it says is, the registered person has to pay for the invoice. Now, in this case, say the invoice, because once I take the IST registration, I will ask my supplier to invoice it to my IST registration number. From IST, I have transferred these credits to all my different branches. Now, who should fulfill this criteria of 180 days? It says registered person who has received the services. So should I consider that this IST registration holder is the recipient, or should I consider that all the recipients of these credits, say there are 10 locations, all 10 locations should make this payment to the vendor? So what's your view on this?
Only the IST will have to make the payment.
IST has to make the payment. Okay. If IST is not making the payment, what will happen? Who will reverse the credit? Anybody wants to try? Try, otherwise you will sleep.
The obligation on part of the recipient, whichever the receiving branch, which is transferring the credit to IST, it is the oneness of that concerned branch. In the sense, initiator of this service or any recipient of this service, whichever concerned branch had received this services, is
Say in our example, Bangalore has regular registration, it has IST also. So Bangalore should make the payment. Is that what you're saying?
Yes, yes.
If it is not making payment within 180 days, then what will happen? Is it enough if Bangalore reverses this credit, or should there be a reversal from all the branches?
All the branches. All the branches.
All the branches. So the complication, the additional complication which is going to be there here is,
Right.
till now we were doing this reversal only in one location. In Bangalore, I had to identify if I have made the payment to this vendor or not. Going forward, if you are not making payment within 180 days, then you have to do this reversal, computation, extra work in all 10 locations. Because you have taken this credit in all 10 locations. So this is going to be one more additional work for you. So easy way to come out of this is make payment within 180 days.
One practical question we do have is, in this case, it's very easy to say the recipient of service is obligated. Now, should I go behind the PO who had initiated the PO?
Ideally you should do.
In fact, because
You should do, otherwise if department does and there is a deviation, then you will have a challenge.
in the sense to make the concerned branch responsible, because the service provider is going to raise invoice on ISD.
See, it is very simple. You have the vendor would have raised an invoice based on some person's instruction. Mostly the branch which is concerned, they would have given this instruction. Correct? So it can be, in this example, it can be the head office.
So I need to have a tracker in place because audit can happen for multiple.
You should have. If you have got any credits through IST also, for that also I can ask you a question. Have you made payment for this within 180 days? For that you will not have the answer in your branch. Say you are from Chennai. You will not have the answer. Then you have to interact with your head office in Bangalore, then take the confirmation. So if Chennai gets the audit, it is not that only Chennai office has the work, Bangalore also will have some work. Possibly if department goes to that extent. Is there any way to avoid this interest? Or the impact of not making payment within 180 days is interest has to be paid. Correct? Is there any way to avoid this interest? I don't have the answer, okay? You want to answer? Because all of you are chartered accountant, you would have found some way out for this. Get a revised invoice, something new. You have anything, Mayank?
Before 180 days.
If you are sufficient, ah.
288
My person.
So rule 37 says interest will be as applicable under 50. 50 says that interest is required to be paid where it is availed and utilized. So to the extent I have enough credit in my credit ledger, I may not be required to pay interest.
So you will say you will not utilize this credit at all.
If I have sufficient credit balance, I can very well pay.
Okay. If you don't have sufficient credits, then
Then get a credit note and then
That's why.
see we got one idea now. And this is subject to interpretation also, okay? Then, any other thing? Don't give the information of transactions wherein you are not made payment within 180 days. I think many will do this also, no? Because department generally they don't go to each and every transaction to see whether you have actually made this payment against this invoice or not. So they will ask you only to give the statement. So there are 100 cases wherein you have not made payment within 180 days, but you will give only 20 or 30, all small amount items. Somebody told me this, okay? I am not saying that you should do this. There is one more interpretation which is possible. I am not saying this is the final view, okay? This is only an interpretation. If you see this rule 37, it says if you have not made a payment within 180 days, then in the subsequent returns, that is your subsequent three-way return, you should add this for paying this tax, or you should reverse the credit. I think that is what the terms which are used in that. Now what will happen if I don't wait for 6 months, 180 days or 6 months? I will do this reversal in the 5th month itself. Because 37 says after 180 days you have to add it in your 3B. I am doing this reversal in the month of 5th month itself. Now can I say that since I am doing this before completion of this 180 days, I don't have to do the reversal, or I don't have to pay any interest? Mike, what is your view? Do you see any issue in that?
Department can say that it is an ineligible credit, so you would have reversed because of that.
No, why it is ineligible?
So they may get into the reason for reversal. So what answer do you have? They will say your initial availment was
I
not
will
correct.
say, I want to avoid this interest.
Officer will say your initial availment was not correct. So that is the reason you have reversed it.
No, initial availment is also correct, no? Because when I availed it in the beginning, I have satisfied all the conditions. This 180 days condition also, I have sufficient time. But I realized that I will not make this payment within 6 months. So 5th month, I have reversed the credit. And this is to overcome that requirement of interest. I will say that.
Officer may say if even after 180 days you still not paid, then they
I have reversed the credit, no, already, 5th month.
no, for levying interest they can say basically you have just
6th month, I don't have the credit with me.
no, for the 5 months whichever you have availed, for the period.
5 months interest in
I am asking Maya because he was also with us and he was in consultancy division, so he has very good knowledge. And he is writing a lot of good articles also. He is on his own, he is practicing. As I said in the beginning, so this is only a possible interpretation. I am not saying department may or may not accept to this view, but this is one option which we can consider if you are okay for litigation. Yeah. Next question is, this entity has a SCZ unit in Chennai. So Bangalore head office DTA, Hyderabad one more branch which is also DTA, then in Chennai there is a SCZ unit. We'll take the example of statutory auditor only. Statutory auditor has given a bill on head office. He has done the audit for all 3 locations. Now, should this credit be distributed to all 3 branches, or can this SCZ unit take this benefit of zero rated supply? What should be? Somebody is coming to give an answer.
has to be distributed to all the banks.
No, can this zero rated supply benefit be taken? Because my Chennai branch is a SCZ unit. Supplies to SCZ is a zero rated supply, right? I can take that benefit to avoid payment of tax. So can this benefit be taken? Yes or no? What you will tell your client? You can't be so quiet if your client is asking this question.
Zero rating is applicable only when used for authorized operation.
Statutory auditor service is used for authorized
But it
operations.
is not fully consumed place. Partially consumed.
No, but my distribution will be only to the extent of SCZ, no? Because I will be going based on the turnover of that SCZ unit. I will not distribute full, right? Who else wants to try? Who has not spoken? Who is very sleepy? You want to try? wants to try? He's saying no. You want to try, sir?
It has to be only in relation to the export, no? If it is
SEZ unit will do exports. Because my Chennai unit has got that SEZ license because it is into exports.
What I mean is the expense, audit expense, it has to be in relation to the exports. And only
Yes, sir. See, all these services which are consumed by SEZ, it will be used for exports only. Because SEZ doesn't do anything else. All its supplies are for exports. At least in our example.
For the SEZ unit, it will
Just a second. Can you call that green shirt person to sit this side because I can't see him also. I see that. ಮಧ್ಯಾಹ್ನದಿದ್ದೀರಾ ಆ ಥರ SEZ unit.
It is not a supply itself. So treating zero rated will not be
Right. ಯಾರು ನೋಡೋದು hidden also. Yeah. See, the benefit of zero rated supply is for the supplies which you are making. IST is for distribution of credits. So in this example, head office is not the supplier. Head office is only distributing the credits of the supply which is made by the statutory auditor. So therefore, the zero rated supply benefit cannot be taken in this. It has to be only a distribution of credits, and even for SEZ unit, I should do the distribution of credits. Right?
So one thing, what will be included in the turnover? The turnover will be.
You will take your GST turnover. Simple. It has to be GST turnover. You see your GST return, what you have taken as a turnover, that will be the basis. Now, one of the exercise which we need to do now is we have to identify the vendors who are providing this common services, and we should tell them you have to, going forward, you have to issue the invoice wherein you will mention IST registration, not the regular registration number. But I have some vendors whom I can't educate. They will always make the mistake of doing this invoicing to my regular registration. So what to do in those cases? How will you distribute this credit? Cross charge. I think he also gave the answer. I think first question and second question was also very similar. So when you have an invoice which is addressed to your regular registration number instead of IST registration, then you have to do a cross charge from regular registration to IST registration number. So I think rule 54(1)(a) also it gives you that power. Now the another example is assume there is an invoice which was supposed to be with IST registration number. Say Bangalore is the head office, Bangalore has the IST registration number. This invoice has gone to Chennai. It is with the registration number of the Chennai instead of IST of Bangalore or head office of Bangalore. Now the question is, in this case also can I use this cross charge mechanism? Yes or no? Yes. I think she gave an answer for my first question, which is it mandatory to take the IST registration? For which the answer was what? Yes. So now you give the answer. So can Chennai do the cross charge, or should it obtain IST registration to distribute this credit? What's the answer? You want to answer?
In my opinion, if cross charge is still made valid or still exercisable, then the whole purpose of bringing ISD and making it mandatory, the whole purpose is defeated. So even in the last case, I'm not sure, I'm not very sure, but if by mistake the vendor is not agreeing to bill ISD and still charges the head office, then the whole purpose of ISD is defeated, because everybody will say all my vendors are not agreeing, so it's coming to the head office. So making it mandatory will not have any purpose is what I feel. So maybe it is mandatory and you should convince the vendors or get the bills amended.
The example which you are considering is different. I understood your point. The example which you have taken now is, it is not addressed to head office. It is addressed to my other location, say Chennai.
So the service is pertaining only to head office or to both?
It is for all the locations. Assume it is for all the locations. Ideally, it has to be for head office, or it should have been addressed to my IST registration. But in this case, it is addressed to my Chennai office.
Then it has to be addressed to head office.
It has to be.
Addressed to the head office where ISD.
It is not addressed. It is not addressed. How will you tackle this?
Cross charge can't be the mechanism, because cross charge can only happen if it's internal between the organizations. When an external vendor is in picture, then ISD should mandatorily be implemented. So it has to be invoiced to ISD.
It is not done. It is not done. Okay. So in this case, she is saying that it has to be addressed to IST. So my question was, what if it has been addressed to Chennai?
If they Chennai want to distribute the credit, they have to obtain the ISD.
Yes. So in this case, if the vendor is not agreeing to change the invoice and the entity wants to distribute the credit, then it has to be by taking the registration as IST in Chennai also. So when we are making the communication, so next 2 months, not even 2 months, 1.5 months, is going to be very, very crucial, where you have to comply with this IST provision. You need to understand this IST provisions fully and identify all these possible scenarios. Because till now it was very easy. I could have done the cross charges from other location to my head office in this example, and it would have been solved. But going forward, this is not going to be the case. Because department, when they see this invoice in Chennai, they will say that you are not eligible to distribute the credit because you have not taken the AST registration. Simple.
But if they don't obtain the ISD registration and don't distribute it, will they be eligible to have a 100% credit in their account?
Still I will question the credit, no? Because it is not pertaining, say in our example, I will question the credit which is taken in Chennai because it is not completely belonging to Chennai.
So that can be ineligible.
It will become ineligible. So briefly we will understand this IST concept. This I am covering in detail because this is something which is which we need to understand fully, and there are a lot of complications in this. IMS I am not going to cover because as of now they are not mandatory. It is only from GST which is there. But there are some minor changes which they have done in the Act also, but that has to be notified first to make it mandatory. So IST, the present definition, when I say old definition, even today this is the definition which is there. If you see this, it says input service distributor means an office of the supplier of the goods or services which receives input services. So because of this definition, what we can transfer is, can you come this side because I can't see you. There are a lot of seats which are vacant. So ISD definition says only on the input services the credit distribution can be done. And if we see this section 20 also, it says the input service distributor may distribute the credit. So because of this, it is not very clear if it is mandatory to follow this cross charge or ISD. So because of this, they have given a leeway. They issued a circular number 199 wherein they said it can be by way of cross charge also. Then they made the amendment to this definition in last budget. Then minor changes have been made in this budget. Now the new definition, what it says is, input service distributor means an office, or other things are very similar, including invoices in respect of services wherein you are liable to pay tax under reverse charge and liable to distribute. So this language change is to make sure that it is becoming mandatory for you to follow distribution of credits, and it cannot be by way of cross charge. Section 20 also they have amended. So earlier I said the present definition, it says input service distributor may distribute the credits. Here it says, if you see that second para, it says the input service distributor shall distribute the credits. So therefore it is becoming mandatory for you to distribute the credits. Any doubts in IST concept? No? What is it?
7. 10 minutes.
10 minutes to 7. So you want to manage 40-50 minutes. Now we'll have all the simple case studies, okay? But I want you to participate. At least last portion, I come late. ABC Limited is engaged in manufacture and supply of fruit juice across India with a production plant in Bangalore. ABC Limited, in order to increase the sales, started few marketing offices in states such as Kerala, Odisha, West Bengal and Chhattisgarh, with few marketing managers in all these places. Now tax department is insisting them to obtain registration in all these 4 states. However, the worry for this company is that already I am struggling to comply with this GST requirement in head office in Bangalore. Now if I take registration in those 4 locations also, I will have increased compliance. Now this company wants you to advise, is there any possibility to avoid this registration requirement in these 4 states? What this ABC Limited can do?
The rental agreement may be executed by the managers in the individual name rather than company getting involved.
Rental agreements will be by managers.
In their individual names rather than the company getting involved. And the company can remember the.
What about credits? So they will lose the credits. So if there is anything. Huh?
It's only marketing office. No?
Marketing
If
office.
they credit also, you will not do anything, right?
No, I might do cross charge, no? If I take credit.
How do you cross charge? You will have to provide service for the cross charge.
There will be a supply, no? Because the marketing manager who is sitting in that office, he is doing that. Office is doing supply to head office.
The person who the marketing manager is working for the company. He is not an individual working as a freelancer.
Correct. But when you have office in the other place, you should not see from the marketing manager perspective, right? You have to see that person. Say you have office in Kerala. So that Kerala office you should see. So that Kerala office is doing the supply to my Karnataka office.
Okay.
So I'd like to see in that way.
No, but here it is a planning policy.
No, I wanted to check on the credit. So
Then you will have to take
in your example, so we are going to lose the credit. So that is one possibility. But I will avoid the registration.
You can take it from an unregistered person, so RCM also will not come.
RCM also it will not come. But manager is incurring it for the company, no?
You take a reimbursement.
He will take reimbursement. Okay. So he will have income tax impact also. Possibly.
Positive.
Okay. So any other way out?
You can as well ask your distributors to do activities on your behalf.
I didn't get it.
You can as well ask your distributors in the concerned geographical states to take care of the marketing activities.
So take care of the marketing activity and bill it to my Bangalore office so that I don't have to get into
Yes.
registration. So I will not pay rentals. So he will pay the rentals. He will take credits. Yes. That is what I also had. The first one which I had is close offices. Manage marketing from head office. So easy way. Second is appoint a vendor who will do this marketing support services, including incurring all these expenditures also. Very similar to what Vinay said. Then check if converting this option or converting employees into consultant technique, wherein they will incur. So instead of paying salary, I will pay them consultant fees or something like that. But all this will work if it is less than 20 lakhs. But if it is going to be more than 20 lakhs, then again he has to comply. Again, I will get into a square one challenge. So the compliance issue will be there here also. But if I can do this to some extent, I will avoid this compliance of IST requirement also. IST requirement, cross charge. So those are the additional compliances which I can avoid. So most of these case studies are real case studies which we have entered. MFR Limited, so they are engaged in manufacture and supply of tires in India and to other countries. Around 30% of their supplies are to other countries, exports. So they are incurring around 8 crore rupees as BCD and around 12 crores as IGST and around 50 lakhs as compensation cess. Now, you know that this BCD is going to be my cost, because I can't take the credit of this BCD. Then this compensation cess also, I can't take it as a credit. So is there any planning around this wherein I can avoid this or reduce this cost? So if client says, you will say no options, you have to just
will come to you. It will come to you for solution.
that is why I am very medical remember. Yes, sir.
The BCD, anyway, you are entitled to take authorized solution, advance authorization and then claim that.
Okay. So is saying advance authorization license can be obtained, wherein I will avoid this payment of BCD to the extent I will use it for my exports. Okay. Then, any other way, sir? Your answer is correct.
IGST, anyway, you can claim.
IGST, anyway, I will take the credit, I will use it for my tax payment.
And compensation says, anyway, the third option of claiming that, I think so, what is it called? We had last year a seminar on this. It's called.
I don't have the liability of compensations, okay? So tires, we don't pay any compensations. Compensation levy is on very limited products. That is tobacco, then your motor vehicles. So these are some of the goods wherein you have to pay compensations, wherein you can utilize compensations. So in our example, it is tire. So these people will get 1 hour credit or 2 hours credit? 2 hours they will get. Not fair, no? Okay. Yes, sir. Compensations is you want to tell, sir. Others also can try, please.
Refund of compensation cess.
Refund on what basis, sir?
exports without payment of taxes they are making.
Yes. Correct. So I mentioned that they have exports of around 30%. When you have exports, then compensation says to that extent you can get it as a refund. Yes. Any other planning which can be done?
They claim drawback under 74.
Drawback under 74,
Or
okay.
import it from countries where you have zero benefit. Then you get a concession rate.
Correct. So there are certain goods or there are certain country-specific exemptions also, which are not exemption, maybe concessions, and complete exemption is also there. So we need to identify whether we have any import of such inputs which are eligible for such benefits, or the countries wherein we are importing the goods from. Based on that also there can be some planning which can be done. There could be cases wherein I am not importing from those specified countries, then I should see if I can source these inputs from the countries wherein I am getting these benefits. So those are some tax planning which we can explore. Import of capital goods under the EPCG scheme. I know this is not specific to GST because all these benefits are under FTP. But if you have exports, then you can consider importing the capital goods under EPCG license, wherein you have a obligation also. You have to meet the export obligation, which is 6 times of your duty saved amount within 6 years. Then, as Sir said, so there is an option of advance authorization or duty-free import authorization schemes, wherein you can import the inputs which are used for exports. You cannot completely avoid payment of this BCD, at least to the extent of your DTA clearance you can't avoid. But in other cases, in your exports, definitely you can avoid if you go for any of these benefits. Then one more is purchase of this ROTTEP schemes. So you'll get it at discounts. I think it ranges from 2 to 5%, 2%. So 2% discount also you will get. So how this works is, ROTTEP script you can purchase from the open market. Say the value of ROTTEP is 100 rupees, but you can buy it at 98 rupees. But the value of this ROTTEP is 100 only. This scripts you can use for payment of your custom duties. Say custom duty liability is 100. You are using the script which is worth 100 for payment of this 100 rupees, but you have got this license at 98. So 2 rupees you are saving. This way also some savings can be done. Then as Vinay was saying, so you can consider this option of procuring these inputs under various agreements. So we have free trade agreements, preferential trade agreements, there is something called as a CEPA agreements also, wherein you can get the goods at concession rate or without payment of any BCDs also. Then benefit of ROTTEP script on our goods which you have exported. Then duty drawback. So both can be claimed at a time. So we have taken the example of tire itself, and what is that percentage benefit which you can get on tires. So for tires we will get 1.4% of FOB value under ROTTEP benefit. Then 3.6% or ₹9 duty drawback. So this is a cap. Maximum what you can get is 9 rupees per tire. Then option of mover scheme is also there. So mover scheme, what happens is, it is not that you can completely avoid payment of this BCD. What you can do is the liability will get deferred. So you are doing rubber imports. You will import today, but you will make the sales. It could be in your domestic market itself. So after 3 months you are going to sell this. So your liability to pay this BCD will be after 3 months. It is not the day of your import. If you are going to export this, then you are not going to pay any custom duties at all. This is one advantage which is there with the mover. So earlier we had the benefit of not paying any of these taxes. I think last year they made some changes wherein you have to pay IGST. Only for BCD you can get this deferment benefit. Capital goods also it should be allowed, but what I have understood is departmental officers are hesitant to give this benefit for capital goods. Say you are completely into supply of goods within DTA market. You don't export the goods at all. You are importing machine under mover skill. As per this benefit, you have to pay this custom duty when you supply this capital goods. So when you will supply this capital goods? It can be after 10 years, it can be after 15 years, you don't know. So for this reason, though there is no restriction in the notification, the departmental officers are hesitant to give this more benefit for capital goods. So refund of cess, as Sir said, so refund can be exported. In fact, we identified this for one of our clients, wherein the client got 1.25 crore as the refund amount. But the challenge here was their expectation increased. So they said, sir, first year you gave a refund of 1.25 crores. Our management is very, very happy, sir. So this time also you do thorough audit. So we did thorough audit. But for our bad luck, for their good luck, they are very good in compliance. So second time we did not get any much value addition. So there were a few cases wherein they had taken double credits, and again it was in few thousand rupees. Then she was not happy. She said, sir, I think this time we have not done proper audits. Our management is expecting a thorough audit, sir. So this is the problem with the valuation. Sir, can you come this side? Because I can't see you. There are so many seats which are vacant. I don't know why you are up to. Okay. The next case study is Outforces Limited. I have tried to change the names, okay? In I have made it as out. Outforces Limited is engaged in export of information technology services. So there have been instances wherein full consideration is not received for the exports. So madam is yawning. That's why I said you should interact. They have not received full consideration. But all other export related conditions they have fulfilled. Now they are worried that because Outforces you know, so they are too big. So they have a lot of money which is stuck, and they have a doubt that they are not going to receive this money at all. You would have heard also, possibly, that department is issuing notices in such cases demanding GST, saying that what you have done is not an export of service because one of the condition which is receiving the consideration in foreign currency or Indian rupees wherever it is allowed, you have not fulfilled that condition. So what to do if client is coming, say Outforces has come to you, you are very lucky. So they are asking you for this advice. Is there any argument which I can take if department comes, or is it that I need to pay tax on this because I am not satisfying one of the condition of this definition of export of service? They are 100% exporters, yes.
So, the ratio of export.
Assume 100%. Okay, assume it is 90-10. What is your answer?
I was of the opinion that if it is a 100% exporter, you're saying, okay, you're saying if 10% is not received, the tax officer will treat that as a tax.
No, what do you mean by 100% exporter?
The entire sales is export, 100%.
Okay, so we'll take both the examples. 90-10. So 90 is exports, 10 is BTA supplies on which they will pay taxes. Next example is 100% export.
What is the percentage of input credit?
Percentage of input credit.
The total
It will be very less, no? Assume 50%.
and same thing.
No, but you are not exporting, right? To be eligible for refund, you should be doing export. Here, what is export? So there is a definition also, right? So for goods, it is very simple. For goods, export means you have to take it out of India, throw it into the sea. It can be argued as it is export of goods. But service, it is not so simple. Service, you have to satisfy 6 conditions. Your customer has to be outside India, place of supply has to be outside India. Then one more condition is you should receive the consideration in foreign currency. You are not satisfying this, therefore you are not eligible for refund because your service is not export at all.
I will just credit note.
I will?
Credit note as deficiency of service.
Okay, under what provision, Mayank?
34.
Section 34, okay. So what Mayank is saying is, I will raise a credit note as deficiency in service, okay. There is a time limit for issuing this credit note also, correct?
Yes.
See if it is, okay, does everybody agree to this view that I will issue a credit note to overcome this?
FEMA violation.
Huh?
You need to collect it. You need to take permission of an RBI and comply with FEMA.
That is also there. That is a different requirement. But for GST purpose, can I do this?
Write-off of more than a specified percentage would not be allowed. I mean, you can't issue a credit note for the full value.
No, that is a non-compliance as per RBI is concerned.
No, making a credit note with more than the threshold limit itself is not possible, is what I'm saying.
Okay, you are saying we can't issue the credit note at all.
For the entire portion, however, you can comply it to the extent allowed.
Some 5% or so it is allowed, no?
In case if you want to breach that limit, you need to seek the permission.
Okay. You have anything to add for this point? He is saying only to the extent of, assume it is 5%. So beyond 5%, we can't issue the credit note, he is saying.
Will I get this money in future or it's actually at the back?
I will not get. I may not get.
Or else I can also take extension from RBI. In case there is any
I may not get because client is not responding. Okay.
Maybe we'll take argument to say that GST-Few destination based where the consumption happens. In case it is out of India, so the authority to GST is not applicable in this case. Maybe you don't really refund of the input tax credit for
Okay. Assume you are the intermediary service provider. Okay. Your customer is outside India. Should you pay tax on the service? Intermediary services? Yes or no?
Yes.
We should pay. Then what will be your argument here, sir?
case of intermediary services, in case of supplies where the
Service provider is located.
in that case, I am not satisfying the other requirements of export of services. It's a total, whether I get a, even if I get foreign currency proceeds in that case, still I will have to discharge tax.
Okay. So what sir is saying is the first point, first argument which he made is, I will say that the GST is a destination-based tax. Therefore, I will argue that the services are consumed outside India. Therefore, the GST should not be paid even if I not satisfy the condition of not receiving this export consideration. Then we took the example of intermediary services. So for intermediary service, he is saying that the place of supply is in India. So I will also tend to agree with him. The one condition which is there in export of service is the place of supply should be outside India. So here in our example, Outforce is into supply of information technology services, wherein place of service, the place of supply is outside India, the location of service recipient. So I will take this argument and I will say that you can't levy GST because it is consumed outside India. I have satisfied the condition of place of supply. At max, you can question me on the credits which I have taken. Because I am not satisfying this taxable supply. It is not becoming a taxable supply also. It has to be export or it has to be a taxable supply. So now the condition I am not fulfilling. Therefore, I will say that this is not subject to tax. At max, you can ask me to reverse the credit on the inputs which are consumed in this services. So that is one argument which can be taken here. And this is based on the service tax law. So service tax law also we had similar conditions. I think it is same condition. I don't think there was a change in any term also. It is all 6 conditions which are there. Same thing has been carried forward to GST also. But in service tax, for addressing these cases, there was a specific provision. The rule said you have to reverse the credit wherever you are not satisfying this export consideration not received. But in GST, unfortunately, we don't know whether it is intentional or unintentional. This provision is not carried forward. Export of service definition, copy pasted. But the consequences for not satisfying the condition of this consideration, they are missed to copy paste. Mostly, I am assuming. But based on this place of supply, this argument may hold good. We don't have any legal precedents as of now, but we have taken this argument in some of our clients' cases. We have to wait for tribunal to be formed to get some view on this.
Look at section 7, supply definition, which are not there in the taxable service definition 65. Here it says between two parties for a consideration.
Correct.
And section 16 first paragraph says for the purpose of business. If you read both the things, if you are not receiving a consideration, then how do you say that I am used it for a business? If you look at the letter of the law, it may not be. If you look at the spirit of the law, then you have to reverse it.
Yes. Correct. Credit reversal, I will agree.
Even without the language, I am saying. Even without the language.
Correct. So credit reversal is what we can try for, if there is any liability which is being questioned. So credit note also is possible, but again subject to RBI approval. So we need to convince the RBI that there is a deficiency in service, because I think that if there is a deficiency in service, it is as good as I have not provided or I have not supplied the service at all. So in that case, even RBI cannot say that I will not give approval beyond 5%. His customer itself is not agreeing that he has received the services. So credit note should be possible if I can prove that it is a there is a deficiency in service. But if it is becoming a bad debt, then I don't think this argument can hold good. So there they will have this limit for sure. Then can this credit note be issued beyond the time limit? Because if you see the section 34, it talks about the credit note mainly when I want this tax benefit. But in case of exports, I don't have any tax benefit. So can I argue that this time limit should not be applicable in case of exports? So that is also an argument which is there, but it is not very strong. Then ITC we have already discussed. Next case study is Narendra and Narendra Limited. So they are engaged in manufacturing of motorcars. You would have seen also, right? Mr. Narendra, so he has decided to give certain goods during annual celebration event to all the employees. From the purchase order, he found that total GST involved is 15 crores. Tax amount I am saying. Now he is reconsidering whether I should give gifts to employees at all. Because I thought the cost of gift is only 100 crores. So there is another 15 crores which I have to incur. I will not give gifts. So he's asking you. So what to do? Can I take credit on gifts? Yes or no? If it is crossing 50,000 limit per employee, then there has to be a GST payment also. In that case, I can take the credit. But there is no use, right? I am taking and I am paying it back. Now, the question which Mr. Narendra is asking is there any way out to address this situation?
Use the car only.
Huh?
Use the car only.
Use the
Car only. Don't transfer it.
Okay. So gift is a car.
No, usage of car.
Usage of car. Okay. So he is saying, so give the car only for usage. That is the gift. Any planning which can be done here? Many heads are down. Last 2-3 rows. Can you try? You are struggling to keep the eyes open.
There's
Any-
sufficient cash payment, right?
Okay. Cash gift.
No, cash payment he makes to the vendor
Okay.
without the GST.
For 100 crores you are saying.
We have.
It's very difficult, no, nowadays. Not easy. Imagination is also difficult. Time is 7:50. So they are coming now. 40 minutes also they will get 2 hours. Huh? It's very, very helpful, no?
It doesn't work like GST.
Huh?
It doesn't work like GST.
I think registration is enough to get CP credits. Signature also will tell your friends to sign. They will answer signature. Yes. Any other planning other than that cash? Cash is very dangerous.
Branding of Narendra Modi can give it on the field.
Sorry, you cannot.
Branding of Narendra can be there on these gifts.
On the gifts.
And then business promotion area. And give it a color of marketing.
Say he wants to give gold chain. So it will have.
The GST will reduce to every person.
That's it. Clear argument. Any other possibility which you see? Thanks, Mark.
We can appoint one royalty, any management program to run this program. Give him, tell that management program to give whatever it is. When he bills him, it becomes like a program for the incentives.
PPT note,
Sir, can it be possible that instead of purchasing the cars, he can have an agreement with the car distributor?
No, I am not saying car is the gift, okay? He is the manufacturer of car. He wants to give some gift to employees during the event also. It can be car also.
So, instead of giving directly, he can route it through the distributor.
Similar to what Vinay was saying, right? Or is it different?
No, means if you don't establish
This is
any
to
connection-
employees, okay?
Employees. Employee can get a benefit from the distributor at some type of arrangement like concessions or in a which can be termed as a perquisite. Means car supply, instead of supply, you can convert into the perquisites.
Okay, so you are saying don't give goods as a gift, give something else.
Means the arrangement should be like that. Instead of supply, you can treat it as some type of benefits, and which can be termed as a perquisites.
Very similar to what he was saying. So don't give car, allow him to use the car. good try, but option of giving it as a cash. This is different from what you said, okay? So what I am saying is, don't give goods as the gift, give employees cash itself. Say you want 20,000 worth goods, give 20,000 voucher or something like that, Amazon voucher or whatever it is. That is what I meant. Vinay has covered, that's why I asked whether you saw the PPT. So another planning can be, you will have, say when you are incurring 100 crores, definitely you have to have an event management entity for this, wherein you can ask them to incur these expenses because the output from them is service. They will procure all these goods, they will give it as a part of their service to our employees. So that is one possibility. Then the third possibility is, as Mayank was also saying, do some branding. If it is gold chain, I don't know how they will do that branding, it will be really tough. But you have to see if some branding can be done, then you can always say that it is a promotional expenses. I am giving this, I am calling it as a gift, but what actually I am doing is a advertisement of promotion of my business. Therefore, it is not considered to be a gift, though I may call it as a gift. So that is also an argument which I can take. Best way may be the second option, not the bestest is the first option, give cash. Second best may be this management event plan, which can be considered.
So in case we make it for convert this into say for a negligible amount.
No, negligible amount you can't do with your employees because the valuation provisions will get into picture in GST. Employer and employee, they are related person for GST. If your employee cannot take the credit, which will be the case, then you have to take open market value. So open market, you may collect, say 20,000 is the value of the gift. You may decide to charge only 10 rupees to the employee. You can collect only 10 rupees, but GST has to be on 20,000 rupees because that is the open market value. So in that case, it is as good as you are not taking the credit because you will get the credit, but the entire amount you have to pay it back also. So this valuation may not be possible. Some people, what suggestion they gave is, I will not bill it to, say you are Ramesh employee, I will not bill it to Ramesh, I will bill it to Sudharani, who is the wife of Ramesh. So Sudharani is not employee, she is not related person. So I supplied this to Sudharani, who is a related person at 10 rupees. This also some people do. I can't hear you. Who is speaking? Yes, sir.
The main expenditure itself would be not for the purpose of business. It is for other than employee benefits. It is for the wife or
Sir, in business, what my view, business, whatever you incur, it is for business purpose. Of course, there can be some personal expenses. Say you are the director, you are constructing a house, those construction expenses you are booking in your books of the company. So that is personal. But if you are giving something to your employees, you will. Okay. So the issue is when I give it to wife of the employee. No, but I am not giving it free now. I am charging for it. Related person, I can do anything. No, my training, say this is a paid training. Huh? Correct. Therefore, I can charge anything, right? Say this is a paid program. Assume I charge 1 lakh rupees for this training. For you, I will charge 1 lakh. There is one more group for which I may charge 1,000 rupees also. Possible, right? Both are unrelated. Now, what I will do is this 20,000 worth goods. If I bill it to, if I collect any notional amount from employee, I have a challenge of this valuation. If I do this to spouse of the employee, then she or he becomes the unrelated person wherein I will charge only 10 rupees. I will pay GST on 10 rupees, take credit on 20,000 rupees. This is not a suggestion, okay? I am saying this is one suggestion which one of the client gave me. I did not say this.
The second option
Second is which option?
is
Wife.
getting event management company
Huh.
responsible. So the event management company will claim the credit, but if it is further supplying, it will still have liability of outward tax. So what is the benefit which eventually it will come to the company?
No, say without these goods, event management company will charge 50 rupees. Okay, 50 rupees plus GST amount. Now I have to give a gift of goods which is 100 rupees. Now if I give it directly, the cost is 180 for me. If it is by event management company, this 80 will not become a cost to them, no? Their basic cost should get reduced. It should be 100 only. So that is the advantage. ತುಂಬ ಜನ 40 ನಿಮಿಷ ಇದ್ದಾಗ ಬಂದರು, ಅವ್ರಿಗೂ 2 hours ಕೊಡ್ತೀರಾ? What is the time? 7? Oh, see this. So Auto Parts India Limited, so they are into manufacturing of certain auto parts. They have got an order from Tesla. Not Tesla, Tensa Incorporation, US. So in the course, certain tools and dies were manufactured with billing to Tensa. However, they were not physically exported. You would have seen this in any automobile industry. It is very common practice. I am the supplier of auto parts. There will be some tools or dies which will be required for manufacturing of this, wherein the customer will say that you only develop these tools and you bill it to me. But I will not send this physically because there is no point. So these tools or dies are for me to use it in the manufacture of these parts. Now in this example, the tools are getting manufactured by these auto parts, but these are not physically getting exported to USA. Hope you will not leave after signing this. Especially that 40 minutes go by. So now the question is, in this case the place of, okay, the first question is, in this example, for this billing towards these tools or dies, whether GST should be paid or not. You understand the question, right? Customer is outside India and the manufacturer in India. Tools are manufactured and used in India. For this billing for tools, should I bill with the GST or can I consider it to be a export of goods? We discussed this concept also, maybe in 4th or 5th case study.
Probably we can show that development of those tools or those dies or molds which are required to manufacture as supply of service. Then you consider that as supply of service for further providing your goods in.
No, first answer this question. Assume these are goods. They are considered to be goods. Whether GST should be paid or not. Then we will come to planning. You are right. I accept the way of planning which you are doing. GST should be paid or not? If GST is not payable, then we don't have to get into planning at all, right? Should we pay or not?
Yes.
So difficult, you make me so tiring. GST should be paid in this because we discussed there is a definition of export of goods. Export of goods means it should be what? It should be physically go out of India. It is not enough if we just invoice. Physically it should go out of India. So in this case, physically it is not going. Now the question is, can there be any tax planning? So he is saying one option. So one option he is saying is, you don't call it as supply of tools, you call it as, what do you want to call it as? Development charges.
Sir, I will bill it along with my other invoices. I mean, I'll spread this cost. Basically, I'll factor this cost, per unit cost into whatever I'm sending across parts later on. I need not even bill this or invoice this first.
Okay. The second option which is giving is, I will not charge for this tools or dies at all. I will factor this cost in the parts which I am supplying. So anyway, these parts are going outside India, therefore I don't have this issue of GST payment. Right? Yes. Any other option? So you got two good options. What is it doing? No, that's. You understood the question? No, not you. But line show. Did you understand the question? Any planning which can be done? Not understood the question. It's so difficult for the speaker, because speaker does spend so much time, effort. At least you should listen. At least you should act like you are listening. Any other planning? Good suggestions. Both are good suggestions. So one simple option is supply the goods to US, get it back. Simple solutions, but it may not happen. Second is partially what he was saying. So try if we can bifurcate this value into supply of tools and services, because calling it entirely as development charge, because what is the result? Result is you have come out with a product, right? You have come out with the goods. You have not come out only with a design or service. So ultimate result is the tool or die which has come out. So department may not agree to your view that it is design or service which you have come out with. So the option which we can consider is, can you call certain portion of the value as design charges and balance portion as goods, wherein the GST liability can be limited to only goods. But this is also not free from risk, because there is a concept of composite supply. Again, in composite supply, they will see what is the principal supply. So in this, the department may say that the principal supply is tools itself, which is goods, and services are integral or ancillary to this goods which you are supplying. Therefore, I will not agree to an argument that you have a partial service and partial goods. The advantage of calling it as a partial service is the place of supply will be outside India to the extent of the service value, and I don't have to pay GST. But this argument also is very loose. And the third possibility is, as he said, so this can be the best possible solution. I will not charge for the these tools or dies which are not getting physically moved. I will factor in this price. I will tell my customer that I will charge this by increasing my parts value. If required, because sometimes the value of the tools can be substantial. So if required, I will ask my customer to pay me the advance towards this parts, if cash flow is my concern. So this way, the GST can be avoided. Unfortunately, in India, they have done some copy paste. See, there is no new concept which is there in Indian GST law. So many of the concepts are borrowed from service tax, few from KVAT, and few from other countries' GST or VAT laws. Few things they have not considered. One is this example. If we see the VAT laws or GST laws of countries like Australia. That is why I have used the example of Australia. So he is thinking of moving this order to Australia instead of India, because if I come to India, you are saying you have to charge GST. Therefore, I will move to Australia. So why I have used Australia? Because in Australia, then one more example can be UK. So these are some examples wherein the laws give specific exemption to this scenario. If you are manufacturing any capital goods which are exclusively used for manufacture of your parts or other goods which are meant for exports, then it is exempted. You don't have to pay GST or VAT for those goods. So there is a specific provision for it. So that is not copy pasted in India. One more simple case. She is engaged in trading of plastic bangles. Plastic bangles are exempted from GST. So she has found a manufacturer in Pune industrial area. This manufacturer manufactures according to the order which she is giving. She is doing exports to other countries. Most of her supplies are to exports to other countries. She is also getting refund of whatever GST she is incurring. She is paying rent with the GST, so she is getting that. She is incurring statutory or expenses, so she is getting GST refund on that because she is exporting the goods. Now, is there any? Now, the first question is: can this plastic bangle manufacturer in Pune, can he get any credit for this? Plastic bangles are exempted from GST. But there is a big plant, he has invested in machines, he has invested in factory building. So there is a lot of GST which has paid, which is continuing to pay also. Can he get credit of this GST which is incurring? Can he get? Simple question. Yes? On what basis? Because he is manufacturing exempted goods. What basis he will get the credit? Somebody said zero rated. It is not zero rated because he is not the exporter. He is supplying this to she. She is the exporter. She is getting the refund. Two different scenarios. So credit is not possible, okay? So whatever this manufacturer is incurring as GST, it is becoming the cost. Now, is there any planning which can be done around this, wherein maximum benefit of this GST credit is taken?
She gets the order, he executes the
Just a
order.
second. Somebody said job. Who said? How it will work?
Job worker, so he will give just labor service.
Okay, you are saying this factory owner, he will give only labor.
Labor.
Possible.
All the supplies should be done by she only.
Okay.
So she can pay the credit and she can go for refund.
Correct. What is exempted is plastic bangles. What the suggestion which he is giving is, let her not take goods as the supply from this manufacturer, let her take service as the supply. Because when he is providing the service to her, then he charges GST, and the service which he is doing is not exempted from GST. So he will get all the credits so that his cost also will come down. So ultimately the GST benefit is passed on to her. She will also get entire refund because all the goods she is manufacturing. Good solution, sir. Any other possibility? You wanted to say something?
He can as well engage in direct export and she can get her commissions. I mean, if that arrangement works.
Right. So the another possibility is, can this business model be as like a commission? So she will say she will get the order, she will tell him to do the manufacturing, export the goods, he will take all the credits so that cost is also coming down, and she will get only the commission part of it. So can be done.
Next order he will she will be out of the
She is not required. So only she will get this duty drawback or benefit which we have already discussed. Then job work is another option. Then commission model is the other possibility. Good, yeah. Last time when I did this, I did not get this answer. So CS have become very, very smart. So last case study which I have, another 20 minutes I have. So VRL is engaged in transport of goods across India. So they are operating as a good transport agency, wherein the customers have opted to pay GST under reverse charge. So VRL, so they are not paying, they are not under forward charge mechanism. They are saying that customers will pay under reverse charge. GTA there is an option, right? So you can pay it under forward charge, or if you want your customer to pay, you will just say that the customer is liable to pay under reverse charge. So you just mention it on your invoice. Now most of you know that from October 2024 there is a new entry in reverse charge notification, which is if you take any property, immobile property on rent, then you have to pay GST under reverse charge. Now VRL, you may be knowing, they have a lot of offices. They have at least 500-600 offices, but most of them are small offices. The GTA, how much space you need? You need a very small space, but numbers are huge. The vendors are not registered. So the additional cost because of this new entry is going to be 5 crores per annum. So they are asking you, is there any way to reduce this or avoid this cost?
Forward charge like ITC and just ITC to knock off.
So one suggestion he is giving is get into forward charge, pay GST at the rate of 12% and take the credit. Okay. Is there any other way out? So most of them are operating under reverse charge for some reason because they see that, and it depends on the customer profile also. Okay. Say for example, you are a transporter, so your majority of the customers are into textile business. So textile, your rate of GST is lesser than your output rate, wherein you have a accumulation of credit, but your output tax rate is only say 5%. Inverted duty structure, you will get the refund, but there are certain goods where there is a restriction also. So textile also you will not get this refund. So therefore the textile manufacturer also, they don't want you to charge 12% because they think that it becomes an additional cost. So they will say we will pay 5% under reverse charge. But this is possible. This is one option which is possible. What he is saying is we will get into forward charge so that this entire 5 crores I will take it as a credit. Any other possibility which you can think of? Actually, we have this query from a client. So if you give a suggestion, you can give this. You can say 5 crores, imagine. Or even if it is 1 crore, imagine. I will be so happy. But you will not get this, I will get this.
Rented accommodation can be taken on these basis. Refunded.
Okay, so instead of rent, lease. Can you convince everybody to get into lease? But okay, this is one option, which is not completely impossible.
The sister company can be incorporated, which will do real estate activity. Just they will take that rented property and give it rent to VRL and charge GST on rent.
Again, it becomes a cost, no?
It's going to charge.
Because they will, my sister concern will charge GST. And again, they have to follow this open market value because I am not eligible to take credit. This issue is still open. I can wait more time also.
On the costly option, buy all the properties instead of paying.
He gets the commission.
But this is possible, it is not completely impossible. Huh? So he is saying the third suggestion which I got is buy all those properties. So that you don't have to pay rent. Huh? Okay. Even I did not get the solution for this. Possible solution which can be there, but again, I can't say it is completely possible, but it is not completely impossible also. We can see if we can ask these vendors to get registered. What happens if they get registered?
Other services of them would also apply.
Instead of RCM, they will start charging us in forward charge mechanism. Again, it will become a cost. There is not going to be any change. And additional issue is, even they have to comply with GST. So that cost also they may try to push it on us. But instead of taking the registration as regular registered person, we can ask them to take registration under composition. So what will happen if it is composition? Huh? Bit lower. RCM will not be applicable. So what is that rate which is going to charge? 5%. 1%. Well, 6. Okay. 516. What is the correct rate? Those who have said 1%, they will say 1%. So the correct rate is 6%. So there is a notification, there is a composition scheme for service providers as well. If the turnover is not crossing 50 lakh rupees, which will be the case here, right? Because otherwise you would have taken registration already. So here it is not crossing 50 lakhs. So I will ask my vendor to take registration and charge me 6% instead of charging 18%. In this way also I am going to straight away save 12%. So assume 12% of this 5 crores, at least 3.5 crores savings. I will take care of their complaints. So I will appoint somebody whom I will say, you file all these returns for all this composition, anyway it is quarterly return now. So I will ask him to do the compliance. I will pay him 1 crore rupees. So who wants to do this? Another 2 crores I am going to save. This is one possibility. So we gave this option also, but again client did not go with it because they felt that practically it may not be easy for them, because here the numbers which you are talking is, it is not only this 5 crores, but the number of vendors are more than 1,000 exceeds. So taking care of compliance of 1,000 vendors is going to be practically very challenging, or I can say it is impossible also. Yes. So 10 minutes I am saving. So if there are any questions, I can take it up. Otherwise, you can wind up. If I don't wind up, then nobody will be there to listen to me. Okay. Thank you everybody. Thank you for participating. Those who did marks, yeah, I have finished.
Question answers.
But nobody is there to ask questions. Oh, you have a question? Very lucky. Yes, sir.
In case of export of service, where refund was received due to non-resident foreign currency, is the case of refund. What is the case if I use the ITC to pay local tax? That was the case of availing refund.
Okay, you have done the exports, you have claimed refund.
Yeah, but foreign currency amount is not received.
You have to pay back the refund which you have got. And department will say you should also pay the GST.
Suppose it is not in the case of refund, but my regular ITC I have been using for my local offers.
See, when you don't fulfill the condition of exports, it becomes like your supplies in domestic market. So for payment of this regular tax, you can pay it in cash or you can utilize the credit also. So there is no restriction on utilization of credits in case of such demands also. Was that your question?
What the issue of taking refund from department in case of export of service?
Have you got the refund?
Yeah, we have got refund.
You got the refund, but you did not receive the consideration.
Yeah.
So one of the condition is to have this export consideration. You will not get refund without.
I am asking in other case, I do 50% export, 50% domestic.
Understood.
My all ITC will be adjusted to domestic.
Understood.
Then the question of restriction or payment back of refund doesn't come. Because it is a question of only refund away.
No, there are two questions here. See, the first issue is when you have not fulfilled the condition of export of service, I will say you are not eligible for refund. That is one thing. You have to pay back the refund whatever you have got. Next issue is for your export which you have done or the activity which you are calling it as export, I will say you have to pay the GST also because it is not export as per GST law.
And there will be
In that case, pay output or restricted.
I said what department is doing is they are asking for the GST on these amounts wherein you are not receiving the consideration. What I said is one of the argument which you can take is as he was also mentioning, since the place of supply is outside India, I will say you cannot levy GST on this activity which is outside the territory of India. At max, you can call it as exempt supply because there is no GST which is paid on this. When it is an exempt supply or when it is a transaction which is not a supply at all, the credit on the inputs I should pay it back. So this is what you can demand. So this is the argument which you can take is what I was saying.
The remittances are received after the expiry of the prescribed limit. Now department is asking the payment of GST on you have received the date.
Yes, we can contest, sir. I think there are circular also on this. You know, last year there was a circular wherein they said that you will get back the refund. You don't have to pay also.
2018.
Master circular next year.
Sir, can composition scheme be opted for a person who is supplying goods and services both? Like if you see elevator maintenance.
No, it has to be exclusively into goods. Only exemption is your bank interest, those things they are given an exemption. Otherwise, you have to be the pure service provider.
They cannot opt for the composition scheme.
I think for combination also there is one now.
Yes.
With a lesser limit, at 5 lakhs limit or something is there.
Only 5 lakhs.
Some percentage they are given, 10% or 5 lakhs some cap is there. So the third option is also there. very, very good. That you have to see if you are into that limit.
And the example that you gave it at the beginning, we have a Bangalore office, Chennai, Bangalore is head office, and ISD.
That example you said, the invoice is given to a Chennai office where we will be asked to take ISD separately. Is there any workaround instead of taking fresh
For fees, you don't have to pay for the invoice, you should tell them to correct the invoice if you don't want to get the ISD registration. After April, I don't see any workout on it because this cross charge also will not work. Because it is mandatory for you to distribute it through ISD mechanism. Thank you.
Thank you, sir, for patiently answering all the questions and then sharing your knowledge with our members. I request our Vice Chairman Manjunath Kallu to hand over a memento to CA Mahadev. Can we have a big round of applause, please? Thank you. Members, like you are all aware, 14th we have clause by clause of income tax budget analysis of income tax on 14th at Nana Jyoti Auditorium. Please do register. Some people would have had some issues with the registrations. Now the website, because we moved into a new website, there were some challenges. But now it's working, it's been fixed, you can do register. Still the registrations are open. And see you on next week. Thank you. Good night.